And welcome to the Ramp Up to Retirement podcast with your host, Dan Reese. Dan, shiny things are on the table for this episode today.
Yeah, one of the most asked questions from clients. What about gold? What about gold?
Yes. Every time I hear a conversation about gold, I think of Burl Ives singing Silver and Gold.
Absolutely. The childhood favorite. That was Rudolph, right?
Right, exactly, Rudolph. But you know what? To put all the humor aside and the comedy aside, gold is a very real, serious topic of discussion right now. As you noted, it just recently breached levels that it had never seen before, went over $4,000 an ounce. And I am sure you must be inundated by clients going, hey, Dan, is there a place for gold? Or do I own gold? Or how can I own gold? So why don't you break this down for us? Because I do think, after having spent several decades as a business and financial reporter, there are a lot of things about owning gold that people just don't understand.
Yeah. And I mean, the thing is that we are inundated with advertisements for gold and they are very targeted. They are very targeted. If you look at a lot of the news shows that older people and retirees tend to watch, you'll see commercials. And who do you always see? Basically it's a paid actor, right? Somebody you would know, throwing it out there and saying, well, I own gold, you should own gold. And
you should own gold too.
Yep. And so because we're seeing this all the time, I mean, obviously questions come up, right? People want to know, just like you're saying, what is it? What should I own it? Should I not own it? And it's interesting because it's like a lot of things in life, moderation, right? But if you listen to those commercials, what do they tell you? You should put your full retirement in gold.
Yeah. Oh, yeah. I mean, the tenor of those ads are really simple. Convert your IRA to gold now.
Yep.
I'm going to guess you're probably not on board with that, Dan.
Well, I can understand the appeal. I do. We talk to clients, and if you think about it, gold has a really good, if you want to call it, reputation, right? It's been around forever.
Right.
People have used it for really almost like currency. I mean, for goodness sake, Roman soldiers, I believe, were paid with gold coins, way back in the days of Caesar and everything else. So they've been around, right? And people feel warm and fuzzy because one of the things that we've seen is that if there's a market downturn like a 2008, gold tends to be pretty stable, right?
Mm-hmm.
But we also know that, if you look at long term, the return's pretty moderate, when you really stretch out the time. And so we totally understand the appeal because it feels good. And then these commercials do nothing but kind of reinforce that feeling, because when you hear something over and over again, you're like, yeah, they're right. And I know that guy on that commercial or that girl on the commercial that's saying that. I trust them, Yeah,
no, I completely agree. But I think one of the fundamental misunderstandings is there are different ways that you can own gold besides just having a gold bar sitting on your kitchen cabinet there, So why don't we talk about, Dan, the different ways there are to own gold and what give us some insight into each of those and the cost involved?
Yeah. I mean, first of all, what you see most commercials for is physical gold.
Yeah.
Because the reality is I always think about this. If you see a lot of advertisements for something, are they in it for you or are they in it for them? Does that, you know what I mean?
Mm-hmm, I do.
That's a pretty good thing to think about. So what do you see most commercials for? We see a lot of commercials for cars. We see a lot of commercials for gold. We see things like these collector coins, all these things that they're like, oh, if you save these, they're going to be worth all kinds of money, right? But what the reality is that when the physical gold, which you see most of the ads for, is probably the toughest way to buy it and own it. And the reason is because commissions can be very high to buy and sell gold. If you look up online, a lot of times they'll estimate, which I don't have exact numbers on this, but they'll estimate anywhere from 10 to 30% commissions for buying and selling. So do you know what that means, buying and selling? So You don't just, you don't just buy it and then you can go use it, right?
Right.
What do you have to do with your gold to use it?
You have to sell it.
You got to sell it, right?
Yeah.
Yeah. So if you got to turn around and sell it and you're hitting these big commissions on both sides of it, that tells you why you see so many commercials.
Wow. Yeah. So to keep it really, really simple, $1,000 investment is going to cost you 10 to 30% to buy. And then when you hold it, if you want to sell it again, it's going to commission to 10 to 30% on the way out as well. So that $1,000 can turn into not $1,000 really, really quickly, which by anybody's accounting is a loss, right, Dan?
Right. And the challenge you also have, what do you do with it? What do you do with it when you're holding it? Like most times, if you have very much of it, you probably need to pay for a secure storage facility. You don't necessarily want to leave it in your basement because guess what? People talk and they're like, oh, the Joneses have gold. Next thing you know, I've seen this too. I actually had a client, their brother had a bunch of gold and silver. House got broken into, taken. And there's very limited coverage for that under insurance. And so, you have to be aware of that piece of it as well, which adds up to the cost of ownership, which reduces returns.
Yeah, let's be real. Nobody wants to store 1 bar or 10 bars of gold in their basement or in their house, anywhere in their house. So you're right. They've got to be stored in an off-site location. These are the things that are often referred to as carrying cost and storage costs that go with gold, right?
Yep. No, absolutely. I mean, you could be it goes to other things. So you'd be a car collector, right? Where do you put them? Well, you got to have a building to put them in, right? And things like that, and maintain them and insure them. And, anything like that, you've got to understand what it costs. Like just a quick side note, that's why a lot of times people are very poor at understanding the true return on their home because they'll own a home for 20 years and they're like, oh, I bought this house for 50 grand. I just sold it for 300. They neglect to think about the carrying cost of that home for those years, right? Which includes taxes and insurance and upkeep and maintenance and all the things that you do.
All those beautiful things that homeowners have to pay money out all the time on.
Yeah, it's a good analogy because gold shares some of those characteristics. Because the one thing you have to remember, gold doesn't create anything, meaning there's no dividend, right? There's no income from a gold bar. So there's nothing that it's doing to help cover the costs of holding it, right?
Mm-hmm.
But let's move on because there are other ways to hold gold that are pretty efficient.
All right, great.
And one of them in the world today is exchange-traded funds or mutual funds that are gold-based funds. That, in my opinion, is a much more efficient way to do it and a better way to do it because a couple things, they're liquid, right? You can buy and sell them when you want. And with that, you can, in most of the bigger custodians now, there's a mini exchange traded funds that don't even have any transaction cost. So you might, there's a cost to the fund, right? There's a cost within the fund, management fee, but the actual buying and selling, many of them, you might, in worst scenario, maybe it's $10, right, to buy and sell it.
Yeah.
And so that's a huge advantage over the physical gold, right? And you can track the gold market with those, which is essentially what you're trying to do anyway, right? At the end of the day. And it's just in your regular investment account.
What are some of those ways? You mentioned ETFs, you mentioned mutual funds. Do the nature of those ETFs and mutual funds vary from company to company?
They do, because some of them are going to be really tracking physical gold. Some of them might be more like around mining stocks or some combination, right? So you know how it is. There's thousands and thousands of funds and exchange-traded funds and all these things in the world. And so you do have to pay close attention to what you're buying. You need to look at the prospectus and say, hey, what's this really doing? And there's a lot of things to pay attention to. Do they consistently hold gold or do they buy it and sell it when they feel like it? Because maybe they're like, oh, we like it, but now we don't. So we're going to go more to cash. There's all kinds of funds that have different rules around how they manage that money. So I'm glad you brought that up because there's education needed when you start doing that, right? And so, but buying it that way is definitely a much simpler way to do it. And it gives you the ease of getting in and out and in low cost and all those good things. But you do have to do some research.
You do. And in full disclosure, Dan, I own a gold miner ETF. Couple of reasons why that appealed to me is they're the miners, they're going to benefit as the price goes up, because it's a somewhat fixed fund, meaning they're not actively trading companies in and out of the ETF. The cost remain really low, like the cost of the one I'm in is less than 1%. And the ETF I bought also pays a dividend because it's an amalgamation of companies. So there's it's just about a 2%, a little under 2% return on dividend for it as well, right? Not every one of these gold products or gold stock products are able to do that. And I'll add, I'm exposed to some bad management decisions by gold mining companies, right? So I'm not getting a true reflection on that gold price because I've got that company as an interface, right?
Yep, and that's a great point that you bring up, and I'm glad because it's a little more education in this area. So the fund you buy, in essence, that fund's out buying other things, right? That it's buying, like you said, in your case, some mining stocks. So gold on itself, we just mentioned, doesn't pay a dividend. Gold on its own, there's no dividend. It doesn't create anything. It's just moving based on supply and demand and what people think of it. Really, that's what moves the price, inflation to some degree. But what you're talking about, when you start actually buying companies that are in the business of mining something, or they're in business in general,
yes,
now you own companies that you hope make money, right? You hope that collection of companies
that's the plan,
make
right?
money. And in part of their profit would be based on how much gold changes in value, right? And so, but overall, you're owning a company that's doing something, right? And that kind of goes into that whole conversation of knowing what you own.
Mm-hmm.
You own stocks and things because you hope to share in the profits of those companies. You own bonds and things like that, where you're just like, hey, basically lending money to get an interest payment at the end of the day, if you really want to simplify it. And when you buy gold, which generally is a diversifier, which we'll talk a little bit about, you're doing that to maybe hedge things a little bit, right? So like if you have some of that in your portfolio and all of a sudden stocks go down or interest rates start to drop, generally gold is going to have a decent outcome during those periods. So it can help kind of reduce the pain, I would say. You know what I mean? If you talk about like with investing, reduce some of the volatility when you put some money into gold like that.
It's very true. So to underscore it, educate yourself. Look at what you're buying. Talk to Dan or talk to your financial advisor and say, hey, can you help me with this? Because a little bit of education can go a long way and maybe save you a little bit of pain along the way.
Yeah.
But Dan, you mentioned diversification. So if I'm a client of yours and I'm coming to you and I'm asking about gold, what are you telling me in terms of what's an appropriate use of that gold in my portfolio?
Yeah. I think first of all, keeping the allocation fairly conservative, maybe 5% or 10 at most.
Mm-hmm.
And also understanding it may not be one of those buy and hold type things. You hear with stocks, you need to buy and hold and let the companies do their thing. Gold is affected monumentally by the overall, economic environment, right?
Mm-hmm.
So one of the things is typically as interest rates go down, gold tends to go up a little bit, because it's opportunity cost. If the bonds are paying 6% interest, those are very attractive, meaning people would tend to buy those versus gold for that safer bucket of money, right? But if all of a sudden those go down quite a bit and they're not even paying what inflation is, gold might be more attractive. So that's just an example of how people view it can change when the economic environment changes, right?
Yeah.
And so we always tell people it's you got to really be educated. Number one, we don't recommend buying too much. Like use it as a diversifier, not as your primary investment. And then understand there are maybe better and worse times to own it. And no one knows the future. I mean, honestly, like I always tell people, you don't know when something's going to go way up, or nobody really knows that, because if they did, they'd put all their money in that, right?
Well, everybody would be all rich and we'd all be happy.
Yeah. That's why diversification does matter. And that's kind of our take on it overall.
So let's kind of wrap this up. If you're going to summarize your advice to your clients and to people thinking about gold as an investment, give us a couple of simple points you want to make and you want to leave us to think about.
Yeah, I'm going to go back to starting out with the advertising stuff. Like, be aware when things are getting pushed as much as gold gets pushed, you need to be very aware, because generally speaking, advertisements aren't free, right? They're going to, they're going to put a lot of ads out there if they're making a lot of money when people actually go buy that stuff, especially physical gold. Be aware, even there's subcategories of physical gold, these collector coins, things like that. Just be aware they're generally not a great deal, right? And so that's a big piece of it. Just be educated, try to play devil's advocate when you see those things, and understand, okay, they're not always as good as what they try to make them out to be.
Right.
And we talked about the cost, which really throws a barrier. Understand gold can be a really good diversifier, right? And nowadays we're very fortunate in the world we live in, the financial world we live in, because you can buy them in an ETF format that's really cheap,
Yep.
And really easy to own and really liquid. And so we're big believers overall, Bill, with, liquid investments, money you can easily get in and, get your money out of and invest in easily, because life changes. You don't know exactly what's going to happen. And so it's really important that you don't get stuck in things, right? In physical products, you can have some issues with that. There's no doubt. So that's one of the things too. And I think overall, it's like a lot of these things we talk about, you gotta, this is all part of a comprehensive wealth management plan. Whether you own gold, how you own it, is it a fit for you? Is it not a fit for you? It's so easy in the world today to get sucked into this, what's hot or what's on Facebook or Twitter or Instagram or, the news stations, and thinking, oh, am I missing something? And we know that generally speaking, when you follow trends, the trends already happened. And more times than not, you end up on the losing end, and it's a wash, rinse, repeat thing.
Mm-hmm.
And so it's just, try to get out of that loop, try to have like a really well thought out long-term plan that integrates some of these things into it, so that you can have a lot more, feel a lot better about what you're doing.
Makes complete sense. For those of you who are listening and have got questions, contact Dan. Can't urge that enough. Dan, if they want to reach out to you, whether they're a client or not a client, how do they get a hold of you?
Yeah, you can always call our office. It's in the show notes, but it's 517-783-1695. We're always available to talk. We have, a few different advisors in the office that can sit down, talk with you either in person or on the phone or Zoom or however you prefer. But my thing always about all these financial topics is that the information you get is probably a half truth, like a lot of things in life. And so the best way to learn is to bring in people that have expertise in some of those areas and get different points of view. We've come into a world where it's like people are afraid to hear different points of view, like it's poison or something. And if you're truly open-minded and can listen, a lot of times you're like, oh, okay, there's maybe in this topic, gold, there's probably some positives there, and there are probably some negatives. But it's not all good and it's not all bad. It's somewhere in the middle. And that's why we just really encourage people to pick up the phone, send an email, go to our website, just start learning, and then don't be afraid to reach out and ask questions. We're not going to force you to do anything. We're not going to charge you money to come talk to us. It's really just an opportunity for you to hopefully improve your situation and make better choices moving forward.
Makes total sense. Yeah, and I'll remind everybody, in case they need reminding, markets are very dynamic in terms of opinion, because on the buy side of something, there's always somebody willing to say, yeah, I'm going to sell this to you because I want to get out of owning it for a variety of reasons. but it is it's a very active, dynamic, real place with real opinions. In seeking some financial advice from experts, a certified financial planner like Dan, for example, is a very smart thing to do. And just to underscore this, Dan sort of referenced it. A conversation with Dan's not going to cost you any money.
Right.
Give him a call. Give him a call. And if you like one another and you want a relationship, well, you can have one. If you just find what he has to say interesting and you want to move on from there, you can do that as well. But, reach out and get in touch with them. And as Dan mentioned, all the contact information is in the show notes. So you don't need to worry about writing it down now. The other thing I think you should do is, if you're not a subscriber, is hit the follow button, because by becoming a subscriber, you'll never miss another episode of this. You're reminded when new episodes drop. And the other thing I would ask is, if you like the podcast, tell people about it. I mean, it's really simple. Let people know. Word of mouth promotion is irreplaceable in this world where bots and nameless beings are constantly, it seems like, reminding us or recommending stuff to us. It's always much nicer when it comes with somebody as a matter of fact. So until next time, I'm Bill Tucker. On behalf of Dan and everybody at Avery Wealth, thank you for taking the time to listen today, and we'll catch you next time. Thank you for listening to Ramp Up Your Retirement. Click the follow button to be notified when new episodes become available. Visit our website at www.averywealth.com or give us a call at 517-783-1695. And don't forget to click the follow button to be notified when new episodes become available. The information covered and posted represents the views and opinions of the guest and does not necessarily represent the views or opinions of Avery Wealth. The content has been made available for informational and educational purposes only. The content is not intended to be a substitute for professional investing advice. Always seek the advice of your financial advisor or other qualified financial service provider with any questions you may have regarding your investment planning. The opinions voiced in Ramp Up to Retirement with Dan Reese are for general information only and are not intended to provide specific advice or recommendations for any individual. To determine what may be appropriate for you, consult with your attorney, accountant, financial, or tax advisor prior to investing. Guests on the show may not be affiliated with CWM LLC. Views and comments by guests may not be representative of CWM LLC. Investment advisory services are offered through CWM LLC, an SEC-registered investment advisor. Carson Partners, a division of CWM LLC, is a nationwide partnership of advisors.